fact, I was just up on the project the week before last, and we had a group of engineers there, open pit and underground planning engineers, resource geologists, and we had a great visit. And there's a lot of lots of interesting ideas and a lot of enthusiasm here as we advance this project. Things are looking really quite positive.
Well, and wonderful to hear you say that, given how tough it seems to be out there midsummer. A lot of stocks finding weakness in the market, trading down on good news, all these good things that happen. Very contrary, a good time to be a contrarian, I think.
Well, yeah, of course, we can't control the broader market. We stick to what we do well, and that's advancing our resource project at Quinnica, and out there looking for the next one on the Addy project. And that's what I'll touch on briefly in this new presentation, Peter.
Thank you.
In the last 5-6 years, and that led to a disinvestment in copper exploration and copper development, at the same time as we're seeing an increased demand for copper in all of this. I mean, it's a battery metal, it's an electric metal. So that combination really spells good things for copper in the future. That, of course, then you look at valuations on basically price to net asset value. I mean, we're currently trading as a $12 million value, about 0.1 of our PNAV. As we advance the pre-feasibility study, we should really benefit from a re-rating,
multiple expansion
as we de-risk the project. Yep.
And not just an increasing multiple, but an increasing resource base potentially on which that multiple.
Well, yeah, I got to be careful with forward-looking statements here, of course. The Addy property, and in combination with the UDS claim block that we've had for a few years now, and did a small drilling program on last year, the focus here for this year and going forward is the Addy property. And that's a key acquisition immediately adjacent to Centerra Gold's Kemess project. And this is a piece of ground that I had my eye, well, I had more than I had my eye on, that I negotiated for the better part of 4 years actually to acquire. Was really pleased to be able to do that earlier this year and towards right around PDAC this year. Acquired that key block of ground. So in combination with our existing claims there, we've got just under 6,800 hectares, that's 68 square kilometers of highly prospective ground on the doorstep of the Kemess operations. That's 68 square kilometers of highly prospective ground on the doorstep of the Kemess operations. So, I mean, if we go to the next slide, and the rationale behind the Addy acquisition, I mean, what is Kemess? Well, Kemess there's a past producer, past production from Kemess South, 3 million ounce gold producer over 13 years, 360,000 tons of copper. But the real upside comes from what Centerra and its predecessor companies have done at Kemess Underground and Kemess East, where past or proven and probable reserves, and there are reserves at Kemess Underground, and then measured, indicated, and inferred resource on Kemess East, aggregate almost 6 million ounces of gold and 1.2 million tons of copper.
That's exactly.
Okay? So this is a significant, really significant gold copper resource sitting right on our doorstep at Addy, and we see the potential on the Addy claim block for the faulted extension of the Kemess East deposit up onto our claim block, the Addy block, that we've acquired an option, and it's an option to acquire a 100% interest in that project. And what we did was put together, all of the prior work there that, it's dating back some well, back to the early 80s, actually, almost pre-discovery of the Kamas system. Just put together all that information, the geochemistry, the geophysics, a little bit of shallow drilling that's been done, and this geological idea, which we think is very much substantiated by all of these data sets, that we very likely have the faulted offset near surface target, I should add,
yes,
of one of these deposits. So we're looking for the fourth deposit in the Kamas district here. Expand the resource, find some higher grade in the central zone, and deliver that study in we reckon a rising copper market a year from now. And then that exploration pipeline, let's do it again. We think this, I mean, this Serengeti or Kwanika is the steak, if you will, and Addy is the sizzle. So we've got both.
Yep, certainly. Well, and some nice creamed spinach maybe with truum and stuff like that on the side.
Yeah, well, that's right. I mean, you know, when you pick up these early stage bets and you get boots on the ground, you never know what you're going to turn up. Fully valuing that at $120 million, well, we're trading at 1/10 of that value.
Yep.
There's really some scope for re-rating here, and I've got a slide that speaks to that here in a minute. So, but before we get into that, I mean, what are we doing at Kwanika this summer? And that's on this next slide here, Kwanika pre-feasibility, really advancing the project towards production. We're targeting a reduced capex from the PEA study, and we're doing that by focusing our pre-feasibility study on the high-grade central zone, the copper-gold zone, better grade, simpler development footprint, so focus on one deposit rather than two.
Yep.
And that simplifies the development plan, should bring down the capital cost, bring down, remove some environmental issues and so on, simplify the project basically. How are we going to get there? Well, we've got a significant drill program happening right now, as we announced there a few 3 weeks ago. I suppose mobilized 2 drills, and we're actively drilling there on the project. Of course, drilling is just one of the many things that we're doing there this summer. We've got engineers, and I was part of that visit last weekend, looking at underground open pit mine development scenarios. We're gathering environmental data. We're looking at waste rock tailing storage facilities, all the things you need to look at in a pre-feasibility study. And so far, it's green lights all the way. So very pleased to see that happening. So our drill program this summer really, I describe it as the 4 E's drill program, and that's how are we going to get there? Well, we've got a significant drill program happening right now, as we announced there a few 3 weeks ago. I suppose mobilized 2 drills, and we're actively drilling there on the project. Of course, drilling is just one of the many things that we're doing there this summer. We've got engineers, and I was part of that visit last weekend, looking at underground open pit mine development scenarios. We're gathering environmental data. We're looking at waste rock tailing storage facilities, all the things you need to look at in a pre-feasibility study. And so far, it's green lights all the way. So very pleased to see that happening. So our drill program this summer really, I describe it as the 4 E's drill program, and that's engineering for development scenarios, basically. So drilling directed towards that. Drilling directed towards enhancement of the grade. We had developed some ideas in 2016 that there could be when one long hole we put through the deposit a preferential direction that had higher grade gold values in it. We're testing that idea this summer. Of course, E for expansion. We're looking for more tons in and around the resource, and a number of the holes that we've got going into the deposit or near the deposit are directed towards that. And then E for exploration. I mean, there's some blue sky here. So 4 E's equals an excellent drill program, I'd say. So, all of that is, is in support of this mine project that we're looking to develop that's got an anticipated annual production, again from the PEA, and we're looking to improve this over the first 8 years of 50 million pounds of copper a year and 70,000 ounces of gold.
Yep.
Well, it's about 180,000 ounce gold equivalent per annum. Over the first 8 years of 50 million pounds of copper a year and 70,000 ounces of gold.
Yep.
Well, it's about 180,000 ounce gold equivalent per annum. That's a significant project. Over the first 8 years of 50 million pounds of copper a year and 70,000 ounces of gold.
Yep.
Well, it's about 180,000 ounce gold equivalent per annum. That's a significant project. And of course, all that's being funded by our partners, Pasco Daewoo, with this $8.2 million investment.
Well, and I love your 10% management fee as well that you collect on eligible expenses.
Well, that's right. That's 10% on all the project expenditures, and then we can net back to us also the 30% mineral exploration tax credit, which is on eligible expenditures, and that's where the eligible comes in. So our drilling expenditure, for instance, which this year is going to be, $2 million or north of $2 million, will recover close to 30% of that, and that's net back to Serengeti, not to Quinnica Copper Corp, to Serengeti. So that's a big part of how we run the company here for the next couple of years, without further share dilution.
Absolutely. And that 8.2 million, do we have a timeline?
Well, yeah, the 8.2, we've spent 1.2, of course, was the initial earn-in by Pasco Daewoo. The $7 million is what's being invested now in Quinnica Copper Corp and what's being spent over the next year completing that pre-feasibility.
That's right. Yep.
And Serengeti re-rating, or we would reckon a re-rating that we should get as we de-risk this project in a rising copper market. And that's what the slide on the left here really show. It's a copper demand supply gap in the forecast anyway from 2018 through the mid 2030s.
Yeah.
And that is largely driven by electrification, not just electric vehicles, but electric distribution. A very significant increase in copper production, in copper consumption.
Well, and talk of deficits already this year.
Yeah, I mean, we've had the copper market slid backwards a bit there, but I see it's gaining strength again.
Oh, the spot price jiggles and jangles. Have you ever seen a tight copper market, really, globally?
Well, certainly, and and I think, what this rising demand and supply gap is coming from the fact that, we had a tough copper market in the last 5-6 years, and that led to a disinvestment in copper exploration and copper development. At the same time as we're seeing an increased demand for copper in all of this. It's a battery metal. It's an electric metal. So that combination really spells good things for copper in the future.